There sure is a lot of interest these days in dividend stocks. So why all the fuss? What do you need to know about them? Most important of all, are they right for you? Well, by the end of this here video, you'll know all that and more. Good day to you folks. Money Jim here, your money pal. So, dividend stocks. In case you didn't know, that's where a company pays you cash if you invest in them. Sound good, don't it? But there's a whole lot more to it than that. So in this here video, I'm going to take you through what dividend stocks are, how they compare to stocks in general, what to look out for, and how much you need to invest in them if you want to achieve financial freedom. So let's start by getting you all clued up about dividend stocks. So what is a dividend? Well, when you invest in a stock, you actually become an owner of the business. A very small one, but an owner nonetheless. And that means you get a share of any profits paid out, and that's the dividend. Company management decides how much to pay out to shareholders. Oftentimes it depends how much profit they've made. So if they have a bonanza year, they may pay out more. And if they've had a rough year, they may pay out less or even cut the dividend. It's important to realize dividends ain't guaranteed. Companies don't even have to pay them, no matter how much money they're making. In fact, plenty companies don't pay dividends at all. There's nearly 100 stocks in the S&P 500 not paying a dime. Companies that do pay dividends tend to be big old businesses that ain't got as much room for growth no more, and so a chunk of their profits get paid out as dividends. It's the likes of ExxonMobil, Home Depot, Nestle, IBM, and Toyota. If we compare the global stock market with the global high dividend stock market, you can see there's a lot more in stocks in the consumer staple sector. That's everyday stuff you buy for the home and to eat and drink. There's also more in healthcare, energy, and utilities, and a lot less in technology stocks. So if it's sexy and exciting you're after, you ain't gonna find it in dividend stocks. The US is still where you'll find more dividend stocks than anywhere else. There's also plenty in the likes of Japan, Switzerland, and the UK, which tend to be lower growth but high yielding markets than the US. And talking to yields, that's a real important thing to understand as well. Easiest way to think about yield is how many cents a stock pays you for every $1 you invest. So if a stock's got a 3% yield, it'll pay you 3 cents for each dollar you got invested. Yield is real easy to work out. You just divide the dividend by the stock price, multiply by 100. Now it's June 2025, and the global high dividend stock market currently yields 3.75%. That's compared to just under 2% for the global stock market as a whole, and just 1.25% for the S&P 500. Now the thing about yields is they sure ain't set in stone. They can go up and they can go down. So just because a stock has a yield of X now, or a stock market's got a yield of Y, that don't mean it'll stay that way forever or even very long. See, as stock prices go up and down, the yield goes down and up. And if a company pays a high or low dividend, the yield will go up and down as well. That sounds confusing. Let me show you how it works. Say you got a stock priced at $100 and it's paying you a $4 dividend. That's a 4% yield. Now if the stock price doubles to $200, the same $4 dividend drops to a 2% yield. Or if the company runs into trouble and its stock price halves to $50, the $4 dividend now becomes an 8% yield. So if you look under the hood of a high yield stock, you might find there's a whole lot of trouble going on with the business, and that's why the yield's so high. It's called a dividend trap, and you better make sure you don't fall into one. So if you're into analyzing individual stocks, don't just go looking at the yield. See if a company can actually afford to keep paying it. Look at how much profit is being paid out as dividends. That's called the dividend payout ratio. As a rule of thumb, a ratio above 50% generally ain't good. And if it's over 100%, you know as well as I do, it ain't gonna be kept up for long. Why would a company pay a dividend that it can't afford, you might be wondering? Well, it's because they know if they cut the dividend, it'll turn investors off. That's because plenty of investors look at how long a company's been putting up dividends each year. If there's a long track record of increasing them each year, there's no guarantee, but it shows the company's committed to keep at it. Lots of companies out there raise the dividends each year for 10, 25, even 50 years or more. Companies reaching the 50-year mark are nicknamed the Dividend Kings, include the likes of Walmart, Target, PepsiCo, Coca-Cola, and Johnson & Johnson. But you know, you're probably better off not picking individual dividend stocks, and here's why. Just like stock pickers in general, whether pros or everyday investors, most folks don't beat the market in the long run, and the chances are you won't neither. So go and improve your results and make it easy on yourself as well by investing in a dividend stock index fund or ETF. There's plenty of them out there. Now, I'm sure by now you'll be wondering how dividend stocks perform. So let's compare the global high dividend stock market to the global stock market in general. As you can see, dividend stocks fallen a mighty long way behind over the last 10 years. In case you're thinking, yeah, but don't forget, dividend stocks pay you a dividend on top of the gains. These charts here show total return, which is gains plus dividends added back in. So even with those extra dividends, you would have been better off investing in the stock market in general. But as I often say, going back just 10 years in investing ain't going back very far at all, and it actually don't tell you much, believe it or not. So if you look at the 10 years before that, you can see the dividend stocks actually did about the same as stocks in general. Going back another 10 years, they actually did a darn sight better. Back another 10 was neck and neck again, and going nearly another 10, because the data don't quite go back that far, you can see that dividend stocks came out on top once more. So putting that all together, what that means is over the last 5-10 year periods, the broader stock market only did better than dividend stocks in one of them. The other times it was either a draw or a win for dividend stocks. So what does that tell you then? Well, you can't really know whether dividend stocks or stocks in general are going to give you better results than the other. So it might be a good thing to invest in both. That's diversification in action. Now if we look at how each is done on an annual basis stretching back nearly 50 years, we can see something else interesting. Since 1976, whenever the global stock market's had a positive year, that's 38 of the last 49 years by the way, most of the time it's gone up by more than dividend stocks have. Certainly not always, but more often than not. But when we look at the years when the global stock market was down, that's 11 of the past 49 years, most of the time dividend stocks fell a darn sight less and even gained on a couple occasions. So what does that tell you? Well, dividend stocks don't normally grow as much as stocks as a whole, usually provide better defense when markets ain't looking good. And as you saw, sometimes falling by less in the bad times, even when you don't gain as much during the good, can leave you with better results overall. What if you're looking for financial freedom through income from dividend stocks? Let's imagine you'd need $50,000 a year to get there. Taking the global high dividend index yield 3 3/4%, you need a portfolio worth over $1.3 million. Now, of course, if you could get by on less than $50,000 a year, you need a smaller portfolio. But even if you think you could live off $30,000, which is $2.5 a month, you'd still need $800,000 invested. Of course, if you wanted to live off more than $50K, you need more than $1.3 million. Now you might say, you can lower the amount you need by getting a high yield, and you'd be right. See, the higher the yield, the less you need invested. But like I already said, it ain't a good idea just to go chasing high yields. There you have it. Now you're all clued up about dividend stocks. What do you think now? Right for you or not? Hope you liked the video. If you did, be sure to like and subscribe. See you next time, sunshine.